So if you want to get into something very early stage, that's kind of hard to find, basically like relying on network fees and basically real revenue. So meanwhile, there's a different strategy that I can come up with.
Looking at the Bitcoin chart, it looks like Bitcoin is up a little bit, but who knows whether it's here to stay? It could be up a little bit, down a little bit. Regardless, the goal here is should always be to plan for the future. And with that, there's a lot of early stage projects that we need to look at in Web3. I'm joined by Patrick, also known as Crypto Rookies, as always, here to give us insights. How are you, Patrick?
Good. Definitely, it's hard whether you're trading or investing for the long term. It's always a bit hard to find out to do it well because I think what people don't always say, but when you trade, there's about 90% of traders that don't make money. So it's only about 10% that do. So I think it's a bit hard, but I think I can describe a little bit a methodology that I kind of designed to try to find early stage project that I would consider making an investment.
And before you jump into that, Patrick, I just want to kind of set the scene here because there's been a lot of, to your point, there's been a lot of challenges in finding those early stage projects because on one hand, you've got meme coins that people can trade and there's absolutely no utility there, right? It's just a casino, you're just playing around. And then on the other hand, there's a lot of really interesting technology that is being built in Web3. But the challenge with that, many times, when these tokens are unlocked, there's really nobody there to buy them, right? So it seems to me that's what's happening on the retail side. So altcoins are just, we've discussed this in previous episodes. It's been very challenging to find the right altcoin. So I am curious to hear how your methodology is addressing these challenges.
In any tech business, reaching a product market fit, it's like very small odds, like very low probability. And I think if you look at the market, there's website where you can track like the revenue of various protocols. For example, Pump.Fun made like $100 million of revenue in the last since January, since they launched. So that's very impressive. But meanwhile, most protocol, there's barely any users. So most of them, even the project that have been around for like 5 years, they barely have any users. So it's really hard to reach a product market fit. That's what it comes down to. So to me, unless it's a protocol that already has a product market fit and there's a handful of them, and it's really hard to find one that is early stage and have a token economy. Because right now you cannot buy a Pump.Fun token, for example. Aave has a product market fit, but the project is mature at this point. It's doing well this week, but it's been around for many cycles. So if you want to get into something very early stage, that's kind of hard to find. Basically, like relying on network fees and basically real revenue. So meanwhile, there's a different strategy that I can come up with, and I can share my screen to show you. What I'm looking at is the market has evolved this year to avoid the low float high FDV project. So I looked into those two things and I made sure that like basically I labeled in green the project that are like according to coin market cap that are the float is the same or very close to the fully diluted value. So I would try to emphasize as those might be worth more, but like coin market cap and CoinGecko, it's self-disclosed by the project what the tokenomic is. So sometimes they could lie. So it's not entirely impossible to see that there's discrepancy in terms of the real tokenomic versus what is disclosed on those websites. So I didn't dig deep enough on all of those projects, but what I did is I went to CoinMarketCap and I sorted all of the project in the AI category because that's one category that the narrative are important every cycle. AI, DePIN, and some DeFi. There's a few other narrative that are not so bad, but for me, I picked AI because I have good knowledge in AI, so I can kind of investigate the project a little bit more. I think so. So I compared to avoid the low float IFDV. And I think I excluded all of the projects that were already past like $50 million. So I just sorted out those that are low market cap at this point. Because if you want to invest long term and have like a really good kind of return on investment, you have to go really early. Even that, like the minimum is like 4.7 million. So it's not even that early stage in a sense, but it's high enough, low enough, I mean. So yeah, so that's basically it. And I put in orange the one that are in the middle, like in terms of float versus FDV that are like it's not equal, but it's close to it. And in red, the one that have like maybe more than double of the of the token that have yet to hit the market. But as I said, those data might be wrong based on coin market cap. So the thing, the second big category that I'm looking at is what is the percentage of decrease or increase versus the all-time high. And in this case, all of them are in the negative. I think it's extremely hard this cycle to find projects that are outperforming Bitcoin. And I think in this case, a lot of those projects, since they launched, are down 90%. So I put them in red. I would probably not touch that because there are so many people underwater that as the price goes back up, it would have, I mean, yes, the market cap is still low. So it's not impossible that when the huge amount of the market comes in retail, like even if it's a 90% decrease, like a lot of them probably would exceed that quite a lot. But I still think it's a bit risky if you're at like above 90% downturn. And there's a few of them that are in the green, but green is still negative. But I think, for example, Dojo Protocol is minus 17% since the all-time high. I think that can be easily recovered. Minus 37 for Octaspace, minus 45% for Neural AI. So yeah, so I consider that. I think it's I would avoid even more very low float IFDV compared to this. But like if it's in the 90%, it's hard to recover to a certain extent. And then the most important category that to me that is important and nobody would even consider looking at is that I'm looking at every project, and let's say if you go to CoinMarketCap, you can check which liquidity are basically the project is paired with. And then you click on market. And then you see that in this case, they are only paired with Ethereum. What the implication of is that as Ethereum goes up during the bull market, this project will be carried with Ethereum. So if there's any buying volume on Spectre, it will be on top of the growth of Ethereum itself. So that means that right now it's suffering maybe partly because of Ethereum has not been doing that well, but we know that it's gonna come. The time of Ethereum will come. So at which point then I think recovering the all-time high will be easy. And also you'll be basically having extra wind pushing you down the hill, basically. So as opposed to being paired with US currency alone. So that's why if a project is only paired with US currency, that means that they are not really doing that well, in my opinion, in terms of treasury management. And to me, that's the most important part of any project, because if you fail to reach a product market fit, the only thing that you have left is managing a treasury well. Kind of like macro strategy, kind of like Tether.
What pair do you like the most? Is ETH, would you say, the second safest behind stablecoin?
I would not, right now, we're in the start of a bull market. Not the start, but the parabolic phase of the bull market is about to start. I would not put any money at all in stablecoin at this point. There's danger, there's volatility. And I think once we get close to the bear market, you don't want to be pegged on Ethereum or Bitcoin or any of that stuff. But in the meantime, yes, there will be extra volatility, but to me, it doesn't matter. You can manage that. And I think the project can finance themselves with treasury management outside of their liquidity pool. The liquidity pool itself, I would put it all into some relatively stable crypto asset like Ethereum, Bitcoin, Solana, and so on. I would avoid like pairing with something a bit more exotic, but the thing
So if
I've
you're
seen it.
looking at this list and you're trying to figure out which projects to put in your portfolio, are you looking for the ETH What pairs are you looking for ideally? ETH,
I
Solana,
think out of
anything else?
yeah, I would probably pick Solana, Bitcoin, and Ethereum at this point. And probably Toncoin, that's fine. But the problem is that all of the project that I've seen that list, there was only two of them that had a partial pairing with Solana. Everything else was either or of various crypto, like those two were various. So it was mostly US currency. But the thing, to me, it depends on the phase of the cycle. And right now, I would put all liquidity in Ethereum or Solana or Bitcoin. So another thing that I did is I looked at the daily volume over a period of 2 days, and the 2 days were spread by a few days in between to see if there was major discrepancy. And then I divided the volume by the fully diluted value, and that's this column here. Because you see there's two projects, one that has 41% trading volume versus the FDV. That's extremely high, and the 36% here. I think it's pretty consistent over those 2 days. So I think they are probably manipulating and wash trading with market makers to make it look good. So I would probably avoid those. I would maybe dig deeper to make sure that it's what's happening. To me, that's repulsive to see that much trading volume on a low market cap. To me, there's something fishy about it. Maybe I'm wrong, but like all of the other ones are much smaller, like 8%. There's like two in the 7-8%. All of the rest are below 1%. So I think I would try to exclude outlier because there's probably something fishy there. Otherwise, you probably want a number of volume versus FDV that is high enough, but you don't want it to be maybe too exaggerated either. Like market makers do a lot of fake volume so that you can get listed on higher tier exchange. So technically speaking, if you wanted to do a short-term trade, that could make sense. But once they reach their listing, probably they're gonna just keep crashing. People will sell out at that point. Because if it's fake volume, at some point it's gonna come by. So if the goal is to invest for the long term, I would look at something that is more legit and make sense